Her beauty and her terror. In Wombrel on the New South Wales Central Coast, parts of this wide brown land are crumbling into the ocean.
Now, if you feel like the price of your home insurance has skyrocketed in recent years, well, you're not alone. New data has confirmed huge spikes, particularly in areas with higher risks of natural disasters.
Well, Australian households may be forced to abandon home insurance altogether as more and more families struggle to pay the soaring costs. This comes as complaints about skyrocketing power bills rise by more than 60%.
State of emergency from the coast.
Torrent carves through
ordered to evacuate. With a $12.8 billion damage bill, that's hard to forget.
The logic for the 600% hike from Westpac's insurance arm, Allianz, didn't stack up for Michelle. She lives on the first floor of an inner-city Sydney apartment complex, and her building strata insurance had barely moved.
Ultimately, we're going to be in a position where we need to make a decision. If we can't forego flood insurance, do we forego insurance on a house completely, or do we have to move?
Here is what your insurer has not put in writing. If your house burns down tomorrow, the cheque will not rebuild it. Not because you failed to pay, because the figure you are insured for was set years ago, and the cost of rebuilding has walked away from it. Across the country, 83% of homes are now underinsured, and the average shortfall runs to 34% of the rebuild. On a $900,000 house, that is $306,000 you would have to find yourself. You have been paying every year for a promise that quietly stopped covering you.
Rachel Sir received a shock home insurance bill last month.
They had upped the price by 35%. I have since noticed that they reduced the amount that they've insured my property for, as well as my contents. So I'm paying more, I'm insured for less.
That is the trade nobody agreed to. The price goes up, the cover comes down, and the two movements are printed on the same page of the same renewal letter, which almost nobody reads to the end. The regulator's own figures, run through this year, put 4 in 5 Australian homes short of what a rebuild would actually cost. And the gap is not a rounding error, it is a third of the house. Understand what that means at the moment of a claim. The insurer does not pay what your home is worth. It pays what you told them it was worth, on a form, at a kitchen table, in a year you have probably forgotten.
That home insurance premiums have skyrocketed by a whopping 51% over the past 5 years. Back in 2020, your home insurance premium would have cost you just over $1,900. But fast forward to October last year, and that figure has ballooned to almost $3,000.
51% in 5 years. In 2020, the average home insurance premium sat just over $1,900. It is now close to $3,000. Nothing about your house changed in that time. You did not move it, you did not extend it, you did not make a claim. The number simply grew. And here is the part that should stop you cold. While the price was climbing by half, the amount you were covered for was mostly standing still. 2 lines on the same policy, moving in opposite directions for 5 straight years.
Their home was insured, but their contents were drastically underinsured.
This is something you only ever find out when you lose every single thing in your house. Only then do you know what your contents are really worth.
That is the design flaw in the entire product. There is no moment before the fire when anyone tells you the number is wrong. The premium arrives, you pay it, the policy renews, and the shortfall sits there silently for a decade until the day you need it. And then it is the difference between rebuilding and selling a burnt block. Insurers will tell you the pressure is real, and it is. Extreme weather cost almost $3.5 billion in insured losses last year across 264,000 claims. But those costs went into the price. They did not go into your cover.
2022, our insurance premium was about $2,800 a year. The increase the following year, which is the year we anticipated it would go up because we had made a claim, went up to about $4,200. And then the following year, that's when it skyrocketed and it went up to about $6,800. We had a 65% increase that year.
$2,800, then $4,200, then $6,800. A 65% rise in a single year, and then a bill above $9,000. That is one family, one house, one 4-year run. They raised the house. They rebuilt the bathroom in materials you can hose out. They did every single thing you are told to do, and the number went up anyway. This is where most people quietly start doing sums they never expected to do. What would I actually lose if I just stopped paying this?
But insuring it has turned into a nightmare. Her premium was about $700, so when it jumped to more than $5,000, she thought it was a mistake.
I was shocked. The insurer basically justified the increase by saying that my property is a flood risk.
$700 to more than $5,000. A 600% increase on a first-floor inner-city apartment, justified by flood modelling the owner was told she was not entitled to look at. The building's own strata insurance had barely moved. That is the second thing nobody tells you. The price is set by an algorithm you cannot open, cannot check, and cannot argue with. You are not being quoted a market price, you are being quoted a private one, and the only lever you have is to walk, which, when 3 companies write most of the policies in the country, is not much of a lever at all.
Now, choosing to forego home insurance altogether is a serious decision, but that's how desperate it's become for some people.
Look, absolutely. Look, you know, the cost of living has risen significantly. Not only the energy, it's now insurance and electricity bills and phone bills, and everything across the street has gone up significantly.
They are not reckless, they are arithmetic. The Actuaries Institute counts 1.61 million Australian households, 15% of the country, as affordability-stressed on home insurance, meaning the premium now eats more than a month of gross household income. On average, those households hand over 9.6 weeks of their income to insure the roof over their heads. That is 7 times what everybody else pays. And once the premium crosses that line, the decision stops being about risk appetite. It becomes about whether the mortgage gets paid this month. Listen to how Canstar's Director of Data described what households were already doing.
It's really starting to pile up, not to mention private health insurance premiums about to hit on the 1st of April.
Another thing, so people really feeling like they're drowning right now with these rising bills, and as you mentioned, possibly another rate rise in May.
Drowning is the word households reach for, and the data behind it moved fast. Watch how fast that line moved. 10% of households were affordability-stressed in 2022, 12% the following year, 15% the year after that. 500,000 more households pushed over the edge in 24 months, and not one of them did anything wrong. In the same stretch, the average home and contents premium went from $2,452 to $2,795. A 14% jump in a single year, with some regions closer to 17.
Take, for example, Brisbane's West. That is the highest area for premiums in the country. And there it will be, on average, $8,400 every year that you'll have to pay.
$8,400 a year in Brisbane's West. Around $5,400 in Darwin. Around $5,300 across Sydney's Outer West and the Blue Mountains. Those are averages, not worst cases. And if you are sitting comfortably because your street has never flooded, hold on. Because the pricing does not stay in the disaster zones. Across the 5 biggest capitals, home and contents quotes rose an average of $374 in the 12 months to June this year. That is a 14.5% rise in 1 year, running at roughly double the long-term rate. And it landed on ordinary suburbs with no flood history at all. For 171,000 households, river flood risk alone now makes up more than half the premium, an average of $8,800 a year for one peril.
Now, do you know that we spend in Australia 400 times more on defence innovation than we do on disaster innovation? That is just unbelievable.
400 times. That is the ratio between what this country spends making its defence smarter and what it spends making its houses harder to destroy. Meanwhile, the building materials that determine your rebuild cost are up around 40% since 2022, which is precisely why the number on your policy has fallen so far behind. So the gap is not carelessness on your part. It is a rebuild bill that ran while your sum insured stood still. And roughly 1.4 million Australian homes are now either uninsured outright or carrying that gap without knowing it.
Biggest insurers report bumper profits, thanks to years of premium increases and a relatively quiet year for natural disasters. Suncorp's profit jumped 52%, Insurance Australia Group 51% and QBE 27%.
Hold those two facts next to each other. 1.6 million households cannot afford the premium. And in the same market, Suncorp's profit jumped 52% in a year. Insurance Australia Group, the company behind NRMA and CGU, posted an insurance profit of $1.74 billion, lifted its dividend by 15%, and announced a share buyback of up to $200 million. A buyback is a company deciding it has more money than it has uses for, and handing the surplus back to its shareholders. That decision was made in the same year that families were cancelling cover on the family home. None of that is illegal, and none of it is hidden. It is published in the annual results for anyone who cares to read them. But hold it against your own renewal letter for a moment. You were told the price had to rise because disasters cost more. That was true. What you were not told is that after those disasters were paid for, there was enough left over to lift the dividend and buy back the shares. And still not enough, apparently, to lift the figure your house is insured for. And notice what the flood modelling is actually doing. It is not measuring your house. It is measuring a postcode, a contour line, a set of assumptions about a river you may never have seen break its banks. You cannot inspect it, you cannot correct it. And if it is wrong about your street, you pay for the error every year for the rest of your life in that house.
So we know from research that over 1.5 million Australians right now are what they would call affordability-stressed when it comes to their insurance. And that means that on average, they're being asked to pay more than 9.5 weeks of income.
Here is the trap most people do not find until they try to escape it. Insurance is almost always a condition of your home loan. Cancel the policy to save the premium, and there is a good chance you have breached your mortgage contract. The bank's security is your house, and an uninsured house is no security at all. So the household that genuinely cannot pay is not choosing between insurance and groceries. It is choosing between insurance and the loan. And when it does go wrong, the queue is long. Complaints to the Financial Ombudsman about general insurance hit 34,231 in a year, up 17%. And a complaint is not a quick conversation. The Ombudsman's own case files describe a homeowner who waited a year for the claim to be accepted, then 18 months for the mould to be cleared before repairs could even start. Nearly 2 years out of the house on a policy that had been paid in full every year. Claims-related complaints alone, delays, denials, and fights about how much you are owed, jumped 38% in the first 3 months of this year.
They are talking about more rate rises in the next 12 months. So it's not just 50, it could be a lot more to come in the next 12 months. So consumers are really just foregoing some of those costs they can't afford.
More rises are coming, and part of what you pay is not insurance at all. In New South Wales, the Emergency Services Levy adds around 18% to a typical home insurance premium. Households and businesses there are set to hand over $1.5 billion through that levy this financial year, a 66% increase in 5 years. On top of that sits stamp duty on the policy, and then GST on top of that. Every time the premium rises, the state's cut rises with it, which means the government collects more from you in the exact year you can least afford the cover.
In the outer western suburbs of Brisbane, Kieran Murphy is looking closer than ever at his grocery budget.
Running my expenses through AI, it became really obvious that those, $20, $30 shops, however frequent they are definitely not stretching as far as they used to. It's never a position I thought I'd really end up in.
So think about the 3 ways this ends for your household. The best case: premiums moderate, growth eases back towards 6% a year. You review your sum insured, lift it to a real rebuild figure and absorb the extra cost. Painful, survivable. The realistic case: the price keeps climbing at double the long-run rate. You do what most people do, accept a lower sum insured to keep the bill under control. And you carry a gap you never consciously agreed to. You are insured, you are just not covered. The worst case is already scheduled. The Climate Council's modelling puts about 520,000 Australian properties, 1 in every 25, at high enough risk to be effectively uninsurable by 2030. In the 10 most exposed electorates, it is 1 in 7. And uninsurable does not mean a letter arrives. It means the quote comes back at a number no ordinary household would pay, and the value of the house quietly follows it down. No agent will tell a buyer the premium is $9,000 a year, but every buyer's bank will find out, because the loan cannot settle without cover. And that is the moment your street learns what its houses are really worth.
All the scientific evidence is pointing towards increased insurance premiums. Insurance premiums really are the canary in the coal mine here. They are the first way that we're going to see the impacts of climate change at a household level.
Now the answer the whole thing has been building toward. Why 83% of homes are short. It is not because owners are careless. It is because the sum insured is the one number in the entire contract that nobody is required to keep honest. Rebuild costs rose about 40% in 4 years. Your cover figure did not move with them, because moving it would have raised your premium. And when the premium got too high to sell, the cover was cut instead of the price. That is how you end up paying more and being insured for less. And it was a commercial decision, not an accident. 4 companies write roughly 3/4 of general insurance in this country. 2 of them hold about 55% of household policies, with renewal rates near 90%, because almost nobody shops. That is not a market, that is a queue. And this is not a slow-moving problem you can leave until next year. In January, the industry declared a catastrophe across 18 local government areas in Victoria after the bushfires, and early assessments put about 30% of property claims as total losses, houses gone, not damaged. Every one of those families is now finding out, in the worst week of their lives, exactly what their sum insured was. They raised your price, trimmed your cover, took record profits, and bought back their own shares. The state governments added their levy and their duty on top. Nobody wrote to tell you the promise had shrunk. $306,000 is what that costs you, but only on the one day you find out. So do not wait for the fire to audit your own policy. 5 things, and none of them take long. First, find your sum insured. It is one line on your certificate of currency, and it is the only number that matters. Write it down before you read another word of the policy. Second, price the rebuild honestly. Not the market value, not what you paid. The cost to demolish, clear, and rebuild to today's building codes, with professional fees. Use your insurer's calculator, then check it against a local builder's per square metre rate. If the two numbers are far apart, believe the builder. Third, compare your cover to that figure. If it is short by a third, you are the average, and the average is the problem. Lift it before the renewal date, not after, because cover applies from the day you change it. Fourth, read what your policy excludes. Flood, storm surge, and actions of the sea are different things with different definitions, and several insurers have changed those definitions recently. Ring and ask which one you actually hold. Fifth, shop it properly. Renewal rates sit near 90% because most households never test the price, and insurers price accordingly. Get 3 quotes on the same sum insured, same figure, same excess, so you are comparing the cover, not the discount. Do it every year, in the month before renewal, and put a reminder in your phone now. Do those 5 things and you will not stop the premium rising. But you will not be the household that finds out on the worst day of their life that the check is $300,000 short. So tell me, what is your sum insured, and when did you last change it?